All right, traders, we got some very important updates to go over within the market. The question is, has the market flipped to micro bullish? Is it going to continue to rise up, or is it setting up for another micro bull trap? I'm going to be walking you through the micro price action. I'm going to be showing you how to trade the best setups at the best prices. In terms of my trading day, it did start off good. I played puts 3 times this morning. All were wins. The portfolio was up over 5%. Gave back all my gains and then turned it into a bigger red day, down 9K on the day. Then I had some very nice scalps into the close with puts at 3:53 p.m. and 3:54 p.m. And I ended up down about $6,000 on the day. Within this video, I'm going to explain to you the mistakes that I ended up making, things that I'm planning to improve on moving forward, things that I'm trying to no longer do in terms of my trading, and I'm going to show you how to trade the best setups, the best prices. So I'm going to be recapping trades and also showing you the new upcoming trades that I'm planning to make. So if you stayed till the end of my video yesterday, I had mentioned Sava, and I told you guys, I've been saying this for over a week now when Sava stock was literally right here. I told you guys, if you want to play puts on Sava, the best price for puts is at $51.06. I identified the opportunity this morning, like I said at the end of yesterday's video. Once you see it go under $51 and react as a resistance level, so right here it went under, it got crushed, which is confirmation. If it rips back up, previous support reacts as a resistance to short the rip, right? So you could have, shorted the stock. If your broker had shares and was hard to borrow, you could have shorted it. But in terms of the options, I was very bearish and I approved, on shorting it this morning, but the spreads were too wide, unfortunately, right? The spreads were just too wide, but the strategy worked. It had a phenomenal gap close reversal, where Sava had this overreaction gap down, and then the overreaction moved to the upside. It fills the gap. And then once it goes under 51 and 51 reacts as a resistance, then you look to play the puts. It was just a classic opportunity where it fills the gap. It doesn't matter that it's breaking out, big pullback, wait for it to shoot back up to the gap fill level, to the previous support reacts as a resistance, and then play puts into the resistance level. That was a phenomenal trading opportunity, and that was the bearish trend reversal confirmation, right? So the spreads were just too wide to play that early, but if your broker did have shares to short, that was a phenomenal trading opportunity. Now, let's move on. So in terms of the SPY, I'm going to start off with the analysis, then I'm going to be going into recapping the trades, the mistakes that I ended up making today, and the trades that I did end up doing well on as well. I think I had like 7 or 8 trades. It was probably like 9 or 10 actually, 9 or 10 trades, and 5 were wins, and then the other like 5 or 6 were losses. It wasn't a good day for me. It started off good, and then the middle of the day was absolutely terrible, and then the end of the day was very good. So the middle of the day is really what got to me, and I'm going to explain to you, some things I'm going to be tweaking with my trading. But let's just get into analysis first. So there is a gap to fill in SPY at $365.86. It filled the gap and it bottomed towards the gap fill level for 4 days in a row. One pattern that I'm seeing is this 3-day consolidation period. So right here, SPY's at key support. It kind of consolidates for 3 days. It explodes up. It consolidates for 3 days. It explodes up. It consolidates for a couple days. It explodes up. It consolidates for 3 days. It explodes up. It consolidates for 3 days. But in this case, instead of being bullish, it went bearish. But right now, the candlestick's bullish. Based off of what I'm seeing, it's really trying hard to flip micro bullish. That's what it is that the SPY is really trying to do here. It filled the gap, it bottomed out, it bottomed 4 days in a row at that level, and now it's finally starting to break out, as it should have. It's going to continue to bottom at that key oversold 52-week low gap close reversal level. Plus you have all these gaps that are waiting to fill above on the SPY. So what I want you to understand is, for this to remain micro bullish, and what would really need to occur for this to remain micro bullish, you see you got a nice bearish 30-minute candlestick here on the SPY, very bearish candlestick here, same candle as here, then it starts to sell off. So this is what I want you to understand. SPY just had a breakout, and the breakout level was right here. We're going to call it $370.60 to $370. That's your breakout zone. The SPY has to turn that into a support level to continue to run, to really flip micro bullish and then to gap breakout, where if it goes above this level, there's no resistance and it's going to start to rocket up to fill the gap. You got a gap to fill at 374.22, which is the best price you can possibly play puts at. Once that gap fills, you wait for it to react as a resistance. It forms lower highs. It goes back under 374, and you play those puts very, very quickly in and out with a very nice lucrative scalping trading opportunity, right? So this is what I want to see. I want to see these key levels. These are my key levels. These are my key levels. $374.22. I strongly believe that's going to be a great put scalping opportunity, right? Great put scalping opportunity. The max risk would be like 375, 375.30. I think that's going to be a great put opportunity. I want to see how we react at the closing price of today. So the previous closing price, there's going to be a gap 370.53. I want you to think of that as make it or break it. SPY just had a break above resistance. It's going to attempt to bounce off the level. If it fails to hold and it reacts as a resistance level, where are you going to see a drop to? We will see a drop to this level right here, $368. And we will likely see a bounce at $368. That'll be the next make it or break it level, right? So my two main levels, I'd say three main levels heading into tomorrow. 374.22, 370.53, and 368. If 370.53 cracks, reacts bearish, it's going to sell off to 368, which is make it or break it. If that holds, it goes back up to resistance. If you see 370.53 react as support, it's going to have a gap breakout, go to the next resistance level, 372. Once it goes above 372, then it rockets to fill the gap at 374.22, best price to play the puts, right? So just to understand, best price for puts, $374.22. $370.53. What is this? This is the top of the channel, the previous resistance. SPY had a small little breakout. We got to see how it reacts there. If it cracks that, it goes to 368. We should see some sort of bounce at 368. If not, then 366. So those are the key levels that I'm looking into tomorrow based off of what I'm seeing. So I'm just going to, bring some awareness to some short-term patterns now. SPY right now is at $370.09. It's having a small little micro gap down. So just understand, if it reacts bearish at this gap fill level 370.53, that is an opportunity for puts. If it reacts bullish and breaks out, it's going to go to 372, and it's going to try super hard to fill that gap at 374.22, which would be the best price for puts from there. And for SPY to really remain overall micro bullish, for true strength, it has to break above 370.53 for true strength. If not, then it seriously needs to bottom at 368. And then if it can't do that, it's going to be a hard sell to 366. Based off of some patterns, let's bring some awareness to some patterns that I'm seeing right here. So SPY did kind of sell off into the close. It did kind of sell off into the close. When the SPY has been selling off into the close, what I've noticed is, so like this is a nice little example right here. It sells off into the close. It kind of just fades. That's what it's been doing. It sells off into the close and then it just fades. It seems like it kind of fades towards that market open. That's the trend. That's the pattern I'm seeing when you have a sharp downfall right before it closes. And this is a very bearish candlestick at the top of the channel, right? So just understand, if you see this going below 370 or you see 370.53 reacting as a resistance, do not hesitate to scalp puts at those levels, as this is the top of the channel. If you see it crack and it's looking bearish towards the morning, do not hesitate to do it and lock in your gains. Do not hold these. I'm scalping these options. I'm not holding for a very, very long time, and I'm in and out. So that's what I want to bring awareness to heading into tomorrow in terms of our key overall levels and what it is that I'm going to be looking for in terms of put confirmation. Now, I'm going to be kind of discussing some of the trades that were made today, the mistakes that I made today, and some things that I actually did right. So let me just kind of break through in terms of like what it is that I'm seeing. So today was a super bullish day. We've been very, very bearish overall since like August 19th for the most part. Puts have been printing like crazy at resistance levels. In terms of today, it just really wasn't the case. I mean, there were some nice quick micro scalps where it was giving into puts with the channel play in the morning, and I did take advantage of those. I actually played puts right here, and then I got squeezed, and I was doing same day expirations. So, those are extremely volatile. I was down 20% within a minute, and then I added into it, and then I picked up another strike as well. and I banked on those. I did very, very well on those. I made like 30-40% adding into the rip and buying more. That worked out phenomenally. And I had put trades earlier into the open as well, right around here for quick scalps and towards open. I didn't even alert those because it was just so fucking quick. But that was well too. And I was 3 for 3 in the morning, and the account was already up 5%. I already exceeded my daily goal by over 2x. I'm trying to make 2% compounded daily. So I was doing very, very well. One thing I've noticed is when I trade same day expirations, sometimes I get stuck holding, and something about them just makes me want to go bigger on them. It's just like that kind of get rich quick type of mentality. I just noticed I make the worst mistakes when I'm trading same day expirations. I usually get greedy in a sense. Sometimes I hold longer. Sometimes I add in pretty heavy. Those are some things that I've noticed in terms of same day expiration trading. So one thing that I am going to tweak in terms of my trading is if I trade a same day expiration, I'm just going to have a separate account just for those, and I'm going to size small within that account. I do believe there's a time and place for them, but I'm going to dedicate an entire account to just trading the closest expiration after the same day. So, the 0 dates, the ones that expire the same day, I'm going to have one options trading account from now on, and I'm going to experiment with this to see my results, where I'm literally just trading the next expiration, whether that's a 1-day expiration, a 2-day expiration, a 3-day expiration, whatever it is. That's what I'm going to be doing. And that's going to be my largest options trading account with a more conservative approach. So that's one tweak that I'm making with my trading. Because what I've noticed is my biggest losses have come from same day expirations. You're going to lose a lot more percentage wise on those, but just because you're losing more percentage wise does not mean you have to lose more dollar wise. So why am I losing, big on them? Well, I'm adding into them. Why am I losing bigger on them? I'm adding into them and I'm holding them. That's the problem. For whatever reason it is, I will hold a same day expiration much longer than I hold like a 2-day expiration. I've found that I'm a lot more conservative, and I'm a lot more in terms of playing it safe when I'm doing a more well-balanced conservative approach to options, which is going with like a more 1-day or 2-day expiration. The contracts are going to cost more, but they're going to be less volatile. And in my experience, I've found that I can manage a loss much, much more easier using those than utilizing the same day expiration, because it's just so easy to get trapped in those. And then when you get trapped, it's so easy to hold longer. And, if you're on the wrong side of the trend and you're in puts and it just keeps on ripping up and you don't cut it quickly, it's like, boom, you just lost 30, 40, 50% very, very quickly. And then you're like, oh man, well, that happened so quickly. Maybe I should add to it, or maybe I should pick up another strike to supplement that loss, right? And then the trend still goes against you and you're just throwing money into thin air. It's very hard to manage your risk and manage, a loss in that type of situation. It depends on the price action. It depends on the day. There's a time and place for them, but I find that it's very tough on certain days, and those certain days can be big drawbacks, and I don't want big drawbacks in the portfolio. So I'm going to just really try to mainly focus on the next day expiration. So that's first thing that I want to bring awareness to. So basically the next expiration, the next one after the 0 dates. Now, another thing that I want to bring awareness to is, one thing I'm noticing is when these trends shift and it becomes super micro bullish, I've noticed I have trouble adjusting initially, because puts will be printing within this bear market for like sometimes 1, 2, 3 weeks straight. And then all of a sudden you have this massive green day and you're just so adjusted and used to trading a specific way, and that specific way just isn't working out. So what would be some tips in terms of adapting and seeing that it's not working out? Well, one tip I can give you is waiting. If you wait throughout the day, you will start to see patterns and you will start to see trends. And you can ask yourself the question, okay, what's printing today? What's printing? So you tell me. Let's take a look at the 5-day, 5-minute on chart. Who's making money within the first couple hours? Who's really crushing it? You could say, people playing puts towards here are making some bank, but overall, in terms of the trend, if you were to go with the overall trend, who's printing money? Is it the people buying puts at the top fighting the trend? You can make money doing that, but they're not printing money. It's the people buying the dips. Those are the ones who are printing money today. All of the people who were buying the dips, because every time SPY dipped, it recovered and it pushed for new highs, right? So that's who truly printed money today. And it could take some time to see that occurring because puts have been printing so nicely over the past couple weeks. It can take some time to see that and to adjust. So one tip I can give you in terms of, recognizing the trend and recognizing the pattern is to just wait. And, you might be wondering, well, how long should I wait to? Give it, I would say a good enough time would be like 11 a.m. to 12 p.m. Give it some time, wait for like 3, 4, 5, 6 30-minute candles to form. You'll have an idea of who's printing money. And by then, it was very, very clear that in terms of who was printing money with the trend and not against the trend, were people who were dip buying call options. That's who really crushed it and did extremely well today, right? Even though it was possible to do well and to play puts at resistance in terms of playing the trend, and in terms of printing money, all the money was in buying calls on dips. That's where all the money was today. So, like I said, to help adapt, I would suggest that you wait, because I'm telling you, the price action this morning, it seemed bearish, and there was great bearish opportunities, and puts were printing at these resistance levels. But then all of a sudden, the price action just changed. As time went on, it became very slow. It started slowly moving up, gradually moving up. And then it got to a point where puts just would not print. We wouldn't see these big, nice drops. Puts just stopped printing past that 10 a.m. period. And for the most part, it was just a consistent uptrend with small pullbacks. So yeah, I just really want to bring awareness to that. And for whatever reason, when I trade same day expirations, I find that sometimes I really do hold them when I'm supposed to be selling. And I think one of the reasons that is as well is because on my position size, I think that's one of the reasons too. If I'm sized in very big on a position, sometimes I'll look to get a little greedy, or sometimes I'll just try to hold it, or I'll pick up multiple strikes. So I'm going to scale back in size as well, because I was playing puts on this uptrend, and I wasn't doing well. I get back all the profit that I made today, and I was up 5% on the day here, closed out everything, and then I kept scaling back into puts towards the resistance, and I kept buying new strikes. I had multiple strikes. I had a 364, I had a 363, a 364, 365, and a 366. That's how long I was holding, and that happened within the span of 30 fucking minutes, where SPY ripped from 363 all the way to 368 within just 1 hour. That's why holding just, it sucks, man. If you get on the wrong side of the trend, you're holding. But I sized into where away, like I knew it wasn't the best situation. So I started off small because I was expecting a pullback. I started off small, but I knew it wasn't the best trade. I wasn't feeling too confident about it, but I took it anyways. And those small losses turned into big percentage losses. But it got to a point where I was buying puts towards here, and I went super heavy. And it got to a point where I was actually back green on the day, even though my other 3 strikes were down on the same days. I nailed the 4th one finally. Like, if you're going to play puts long enough on all these strikes and you're wrong on the first 3, eventually you're going to hit one. So if you have the biggest size on that one, it can recover all your losses. And that's literally what happened. Like I was actually, when it dropped to here, I was actually up. My portfolio went from green up 5% to then down a couple percent to then back up right here. And I didn't sell. I was so fucking greedy. I did not sell, man, because I've noticed when I'm like down in a nice loss in that situation, especially with same day expirations, I usually just hold it and aim for a bigger win. And then I always give it back, man. I could have literally just scalped it the whole day, man. So the moral of the story is, man, you got to scalp. That's really what it is that you got to do. And, same day expirations can be extremely tough. I see it happen where you get stuck holding it and then you play multiple strikes, try to recover the loss. Like it can be extremely tough. It's extremely tough because the volatility is just so high. Like you have to get in and get out. If you hold it, you're going to lose. It's not going to work out. And I found that when I've been trading these same expirations, I've been holding them for too long because it's just, the trade goes against me so fucking quickly and I'm already down. So I hold it a little bit longer and then it's just like, there's no way this is going to fucking print. So then I'll buy another strike, and then sometimes that strike will work and I'll make all the money back because I'll scale in higher. There's a way to do it with risk management, position sizing. Even if you're wrong with like 2, 3, 4 strikes, there's a way to do it where you can actually make money doing that. It's just, I don't think it's the best thing to do. And if you were to do it, I would say you really have to understand risk management and position sizing. You really have to understand sizing in your trades. If you're going to trade those same day expirations, and you just can't hold, you got to scalp them. You got to scalp them in and out, man. If I were scalping those in and out, I would have been up on the day. but I didn't sell, man. And I even knew that I should have gotten out, man. Those were bullish trend reversal dojis. Everyone pointed out in the chat it's going to try to reverse here, and I was up. It was just a very tough situation to sell that quickly, but I did have the opportunity to do so. That's another thing with same day expirations. Like, you have to exit really quickly because SPY can reverse within a heartbeat. For example, like if you played puts right here at like 364 and then it has that nice sell off and you're all happy, if you don't sell within seconds when the price is down here, guess what? All that, you're probably playing puts right here. You're probably, say you played puts at like 364 and it drops all the way down to 362.60. Depending on the expiration, like you're probably up 30%, 40% within 2 minutes. If you don't sell within seconds, you give it all back within 2 minutes. See what I'm saying? And then sometimes it's generous. This is generous where it comes back down, but it doesn't stay there for very long. You see what I'm saying? Like, you have to exit those really fucking quickly, no matter what strike like you're doing. But that's another thing with same day expirations. I've been in trades where like I'm up 10, 20, 30%. I try to get out. And, it rips against me too quickly. So then I'm stuck holding a little bit and it gets very, very frustrating. But one way to prevent that is to be prepared. You can pre-fill out your order where you're selling it way below the bid, so you just get filled. Or you can use like a custom order. There's a custom order on Webull, and then Thinkorswim has one too, where you just get executed automatically. You will get executed no matter what. The moment you click that button, you will get executed. And if it moves, once you send out that order, it's set up in a way where it's going to execute and fill you as the spreads are changing. It's going to fill you to the nearest price of the bid. So as the bid is moving, it's going to consistently fill you to the next price of the bid where you don't have to cancel the order. That's like a special custom order, right? But it's all possible. It's all possible to be done. But I just want to bring awareness to that. Now, in terms of some trends and some pattern, recognition with the 30-minute chart, in terms of some bullish trends, this is something that I want to bring awareness to. So where were some opportunities utilizing the 30-minute, pattern trend strategy that you could have used today on SPY to make some nice trades? This was one right here. So check this out. SPY has this big green bullish candle, and then it forms this trend reversal candle. You'd think it looks kind of bearish, right? But then what happens on the third candle? The SPY explodes up. So here we go again. So say it's 11 a.m. and you see this pattern right here. Actually, no, let's say it's 11:30 a.m. and you see this pattern right here. What are you going to think? You're going to say, okay, this is a very green bullish candlestick. This is a very green bullish candlestick. What's going to happen the next 30 minutes? The SPY is going to explode up. And guess what happened? The SPY exploded up and it formed the same candlestick it did on the second one. You see that pattern? So then what happened on the third candle? The SPY exploded up again. Here we go, the third candle. SPY exploded up again, and then it went even higher. Do you see that pattern? Do you see that trend? So there was one time where I did actually play calls. It was a nice trade. I sold way too soon, but I have no complaints, man. I'm a scalper. Like, I did have a nice call trade where I was expecting a very nice breakout, and I got my breakout, and it worked perfectly. I believe it was on this 30-minute candle at 12, right here at 12 p.m. because I saw that pattern. You can pull these patterns out of thin air. You can pull these patterns as the chart is developing. So the pattern that I just showed you, that could have been pulled at 11:30 a.m. And the reason why is you have this big green bullish candlestick, it follows up with a spike. And then you could see right here, you have this green bullish candlestick. So what's going to happen? Same candlestick, it follows up with a spike, follows up with a spike. Same candle. What happens the next 30 minutes? It follows up with a spike. It follows up with the spike, right? Those were two opportunities for calls using the 30-minute strategy. I took advantage of one of them. And then I got back on puts, just not trading well, gave some money back there. And then in terms of the trade of the day, this was the best trade of the day. And these puts printed. They absolutely printed, right? So I started off having a good day, then it turned into a bad day. And I'm going to continue to trade if I see an opportunity. And that's exactly what I did. And I absolutely crushed it during this power hour, this last session here. Absolutely crushed it. These were the trades of the day. I played put options twice. I played puts right here at 3:48 p.m. I played puts. And then I literally sold right here at 3:51 p.m. Within those 3-4 minutes, I ended up making a 40% return within 4 minutes. And then guess what I did? I played puts again. There was a gap to fill on SPY right here at $372.03. I noticed that SPY was climbing back up. It filled the gap. Guess what I did? I played puts at 11:53 p.m. and 11:54 p.m. SPY got absolutely crushed. The puts that I bought 2 strikes, 371. They went from 40 cents. I literally bought the bottom of these. They shot up all the way to like $1.60 or 70 or 80 cents, something like that. And then I played the 370 out of money strike at 10 cents. The bottom was at 8 cents. They shot up to like 40, 50 cents. It was absolutely insane. The reason why I decided to play puts there is because SPY has been selling off recently the last 5 minutes of the close. Let me show you what it is that I'm talking about. Right here, this was yesterday. SPY sells off very, very nicely within the 5 minutes. And the top was at 3:55 p.m. That was the top. And then it sells off, right? Some people might not think this is a big pullback. Well, if you're doing a same day expiration, you can make multiple hundreds of percents by getting a 5-minute candle correct with the perfect entry into the close. And it did the same thing. It did the same thing here as well. This was the insane one. These 10x. SPY went from 367 all the way down to 363.50. Put options 10x. So I was seeing this pattern where SPY has been selling off at around 11:55 p.m. And the later it sells off, the better. Because it's an unexpected move. People aren't expecting it to crash last minute. So as theta decay is burning these, as it's going up, the bigger the pullback, the better. And the last minute it happens, the better. And that's exactly what happened in this situation. So I saw the pattern and I took advantage of that particular pattern, of that situation on the SPY. And those paid off. I made 140% on those puts. In terms of my bad losses on puts, the bad losses were 50 to 70%. Now, of course, I did, size in bigger on the ones in the middle of the day because those are a lot safer. You have more time. That theta decay isn't going to hurt you. In terms of playing lottos right into the close, it's extremely high risk. These are extremely high risk plays where you have to be right and on the dot, right? They're more of like lottos. But those ended up working out and I made some profit back, but obviously still red on the day. But in terms of percentage-wise, I was actually up on the day in terms of like if you were to take all of my contracts, percentage losses and percentage wins, I was actually up on day. But I didn't size in on them all evenly because not all contracts and trades are created evenly. That's why. But that was interesting as well. But yeah, that was the killer trade that I ended up making on the SPY put options, utilizing that pattern where it's been selling off at 11:55 p.m. And another reason why is you just have to ask yourself, like, what's going to print? Puts have been printing for weeks. This just bottomed at 358.72. It rocketed all the way to 372.30. For the past 2 days, SPY has been getting crushed, throughout the past 5 minutes. So why not try puts? Why not try puts right before the market closes? It's due for some sort of micro pullback. It makes sense to logically play a lotto during that time period because, like I said, SPY has been selling off around 11:55 p.m. for the past 2 days with nice micro pullbacks. And also, think about it. You have to ask yourself, when would the puts print? Puts have been getting destroyed all day. They've been getting wrecked by theta decay. They've been getting wrecked by this nice uptrend, this very bullish day, right? From 358.72 to 373. It's obviously micro overbought. It's obviously due for a pullback. And if it's gonna pull back, it has to happen at some point. And it never happened until the last couple minutes of close for the puts to actually print. That's when it would logically make sense. If there were to be some sort of, if it's uptrending the entire day, and there's been a pattern where SPY has been dropping around 11:55 p.m. and puts have been getting crushed that entire day, why would it make sense for SPY to just close directly at the highs and keep going for the last couple minutes? Why not let puts print a little bit? And that's exactly what happened. And they absolutely printed, right? So you just have to put yourself in that situation. It's like if you're scalping calls up here, would it make sense for them to print? I don't think it would make any fucking sense because SPY has been going up the entire day. Puts have been getting crushed. There has to be some sort of play where puts explode up, and it would make sense because this just has nowhere else to go, and it's at the top of the fucking channel. You're at the top of the channel, man. You're at the top of 370s. So that was the lotto play that did work out, and I played it perfectly. I alerted this twice, and I brought awareness to it. before. This was the killer trade. I literally bought puts right here, made 40%, sold on the dip. If I didn't sell on this dip, I would have been down right here. I got back in right here on these green candles, and then I made 140% and like a 50% plus return on the other ones. It was insane how fast that happened. But yeah, that was the play. And just always ask yourself, what makes sense? Would it make sense to play puts here? And again, another reason why is gap close reversal. There was a gap to fill on the SPY right here. It had a pullback and it rocketed back up as soon as it filled the gap. Red candle, bearish confirmation, play the puts. Add right here, previous points of resistance, boom, sells off. So those are the recaps. Those are the overall trades, and those are the overall mistakes. And like I said, man, I got to get better on bullish days. And if you're really trying to trade the trend, give it time for the trend to set, right? And let the trades come to you. Let the crazy trades, come to you right there. I let that trade come to me, and it was the best trade that I ended up making today. It was the puts right before the market closed. So let the trades come to you and focus on the trend. Focus on the trend, give it some time and ask yourself, what's printing? What's going to continue to print? Who is making the money? Who is making the money but not fighting the trend? There's people maybe scalping some puts, making some money here, making some money here, making some money here, but who is truly crushing it? Where is the overall trend at? And the overall trend was bullish. You see right here, every single fucking dip printed today, man. So it's just taking advantage and utilizing the trend, and that 5-minute trend was very, very bullish. I mean, every previous resistance level reacted as support. In terms of my video, the video clearly stated, like, if you see that 364, react to support. If you see 363 to 364, react to support. It's going to be a bullish move. SPY's going to pump. And that's something that I should have listened to. I should have written down mental notes, and I should have been more prepared. So it's just about having that awareness and that preparation. Always take notes and always understand what the overall trend is going to be when a key level reacts bullish. This is a bearish reaction at the previous closing price, but if it breaks out and reacts bullish, that's a flip-flop, and then SPY is going to rocket, right? So always be aware of that. So with that being said, guys, that's going to wrap up tonight's lesson. I hope you enjoyed it. If you do want to be a part of Trader Society, it's going to be the first link down below in the description. Everything is explained in terms of what is included within Trader Society on the first link. Watch the video, read the entire page, and you will understand what it is that's included within the program. If you want to surround yourself with a group of traders who are dedicated and focused to mastering, trading the SPY, trading the options, calls and puts, trading the trend, trading the unique price action gap trading strategies, trading, the 30-minute trading strategies. If you want to learn how to master trading price action, I can give you that third eye. I can show you how to master both ways of the trade. If you're interested in joining Trader Society, it's the first link down below in the description. You get access to the video lesson library where you learn all of that, the strategies, the price action, the candlesticks, everything is that I utilize to trade and master the SPY. You also get access to risk management, position sizing, mindset, and psychology training within the program. Also the chat room. Within the chat room, you can send me a direct message. You can send the members within the chat a direct message as well. And there's plenty of great networking opportunities in there as well. We got a lot of people who are consistently crushing it, man. Look at this. I may be red on the day, but my team absolutely crushing it, man. Just because I'm red doesn't mean that, just because I'm red doesn't mean that, they're going red, because it's self-sufficient. It's self-sufficiency. Hold on one second. Let me show you what I'm talking about. So yeah, just because I'm red, doesn't mean that they're red. We got people absolutely crushing it today. Yeah, that was my loss today. But it turned into like 6K because I played the puts after that at the end. But yeah, big shout out to everyone. But this guy, absolutely insane. A 40% return. I mean, that's unheard of. But yeah, if you do want to be a part of it, guys, it's the first link down below in the description. You get access to the chat room, the Discord server, the live trading streams, the voice channels, the networking opportunities, the video lesson library, the stock analysis, the watch list, the price action analysis, the live trade alerts. There's so much more to it. Everything's explained within the first link below in the description. I will see you guys tomorrow morning.